to the trade before we get to the charts. Time to take a quick look at what traders are watching out there. French President Emmanuel Macron will appoint a new Prime Minister in the coming days, whose top priority will be getting a 2025 budget adopted by Parliament. This after, of course, the government was toppled by lawmakers. The euro rallying as French government bonds steadied after the collapse of France's government, even as Bitcoin soared to a record past $100,000. Oil prices lower, investors weighing the ample supply outlook for next year against OPEC Plus delaying its planned output increase by 3 months to April 2025. And gold prices lower as US Treasury yields firmed after the release of weekly jobless claims data. Of course, we are awaiting the non-farm payrolls tonight. Richard Weismann from Weismann Consulting is observing a bullish trend in US equities. He spoke earlier to Andrew.
Yeah, so first things first, obviously, the U.S. equity markets continue to be in a bull trend, and we feel that that is the path of least resistance, hard to fight. But what I thought would be interesting to talk about for your audience would be the Nikkei 225, which seems to be in a sideways, low vol consolidation area where you have obvious levels of resistance at around 40,200 and then some strong support at 37,300, and a break of either one of these two areas with conviction could lead to a strong trend. Hard to predict the future, but obviously as long as US equities remain strong, then the odds would favor the Nikkei breaking in the same direction. Global equities tend to be positively correlated with each other.
Okay, so no reason at this point then you see, particularly looking at the technicals, that you could see any downside for the Nikkei.
Yeah, it's always safe when you're in these low vol environments to wait for the breakout just in case, but certainly it would be a hard argument to make that now is the time to panic and sell out of the Japanese stock market. Best to wait, and the odds favor, all things being equal, a break of that 40,200 resistance.
Richard, let's move from equities into commodities. Now, the focus has been on gold. It has done very well this year. What, though, of silver, which tends to lag, but what are your observations of what you're seeing with silver? Obviously, it also has that industrial use, so a lot of people like silver as a result.
Yeah, I've seen a lot of bullish sentiment in silver. It's got to catch up with gold is the argument, and certainly long-term precious metals are in a bull market. We haven't broken the long-term uptrend. You can see I was able to draw a uptrend line in silver still. However, it was kind of interesting that on the heels of the US election over the coming days, we saw this retest of this $30 an ounce area. So far, that area is held. And if we were to break that downtrend line, which is pretty steep, then we could do a retest of 35, maybe even break to new highs. However, if that 30 area goes with any conviction, this thing could really go down, especially since I think there's a lot of bullish sentiment, and I think long-term trend followers are still positioned long. So if we were to break the $30 with conviction, it could drop. I'm not saying it's going to drop to $10, but 22, certainly 25 would be pretty easy to do.
What correlation are you seeing with gold at the moment?
Yeah, it's a decent correlation. It's certainly historically strong. It continues to move with gold. But as you stated, I think it's lagging. And, the common conventional wisdom of Wall Street is to buy the laggard. I personally believe that you buy the leader and you sell the laggard. So I think that if this thing were to turn around and we were to have a new leg down, that silver would be the leader on the downside. and gold would also move down, but probably a little more slowly, a little less conviction.
Oh, we don't have the gold chart, but are you seeing the potential there that gold could break lower?
Yeah, it's possible. It's a little bit more bullish than silver, but certainly it's a very long trend. It's very strong, and then we had a decent correction on the heels of this election, and then have been consolidating since that correction. But if I were to play the short side, I would wait for a close below 30 on silver and then sell. I wouldn't necessarily sell gold. If silver were to break 33, I'm guessing that would correspond to a break on the upside in gold, and that would be the one I would prefer to buy out of the two.
Richard, let's take a look at currencies, and in particular in the wake of the election, and well, even prior to the election, we had the Trump trade. Certainly the US dollar has maintained its strength to the detriment of some of those, particularly those China proxy currencies, such as the Aussie dollar commodity currencies as well. How are you seeing that pair at the moment?
Yeah, so at the risk of tooting my own horn, the last time I was on the show, it was right before the elections. I was short the Aussie dollar, short currencies, foreign currencies in general against the US dollar. And I see no reason to lift my shorts in any currency with the exception of the yen. The yen seems to be in its own world right now. Not real dramatic, but there seems to be maybe a flight to safety. Maybe it was just overdone in terms of dollar yen to the upside, and we're correcting. But the Aussie US, even though it seems like we're against the support area that I had mentioned last time, the 6,400 level, I do think that we have the path of least resistance down and a potential test of 0.62. So it might not be over yet.
Okay, 62 is lower level possible,
Yeah.
do you think? Could it break down to 60?
It could, yeah. That's the thing with these trends. They tend to go further than anyone expects, and unless you have some evidence to the contrary, like breaking that downtrend would be a good first step. Then I think you just have to follow that trend and continue selling Aussie against US.
Okay, well, Richard, looks like I might have to put that trip to the US to the side one moment until we get some strength back for the Aussie. Let's just turn to oil. Now, the focus is certainly on geopolitical tensions, what's going on in the Middle East at the moment. Also, there's decisions on OPEC Plus. Technically, what are you seeing for oil?
Right. So as you said, there's all sorts of geopolitical risk in the market. Russia, the Middle East, OPEC Plus has come out and they're talking the market up. And yet, despite all of this fear and despite all of these bullish arguments, the chart is moving lower. You've got lower highs and lower lows. And there's some decent support in Brent. You can see we are just above that level. But when I look at the entire petroleum complex, including middle distillates, it sure seems like distillates are leading the way lower. And my guess is that that downtrend, which is still in effect, is going to drag crude oil, both Brent and the US marker WTI lower. So I'm looking for a break of that support at 71, and then from there probably around $10 lower before we have any real support to speak of. So probably around $60 a barrel basis the Brent front month.
All right, Richard Weissman there speaking to Andrew a little earlier. That does it for this edition of The Trade. Be sure to join us again next week.